No, ironically, there's a large segment of the population that buys more when it goes down than when it goes up. There are two camps here, I guess you could say. They're the people who are new to silver, many of which who might not be looking at it, in my mind, the right way. They're looking at it and are depressed that they bought it at 27 or 28 or 29 or even 30 up in last right at the silver squeeze. And have watched it meander and go down in this environment. Now, I understand that. That's I'm not poo-pooing that, and I'm not trying to talk that away. But I think the important thing to understand is that it's wealth, and it's been wealth for 5,000 years, and it's being suppressed. It's being suppressed. I mean, that's unequivocal. We could spend a whole hour talking about commercial bank manipulation in the silver market. If you look on the COMEX market, it is the one commodity that has by far the largest concentrated short position of any commodity traded on the entire exchange. Why is that? That's for another day. But the bottom line is simply this. When you look at silver, there are so many fundamentals. We can get into those if you like. We can talk about what those fundamentals are that are screaming that silver should be much higher. You're seeing a bleed down of inventory off the COMEX market. You're seeing big money accumulated quietly using the suppressed COMEX price as cover to reposition and to de-dollarize into things like gold and silver. I don't think there's an investment on the planet quite like silver, so there are a lot of people who understand that. And they look at the poor price performance as a subsidy, because ultimately I think when you're talking about mathematics and economics, ultimately those people, myself included, I think will be proven right. And it won't be with glee and pride that I take that, because I think it will come at the expense of the dollar and the markets around us. By the same token, there's also that camp of people who are buying it because they want to make a profit. So I guess what I'm simply saying is this, in a very roundabout way. May is typically the slowest month of the year, and it was. There are some people who are exasperated by what's happened, the ones that came in and bought for profit. And I think they're looking at it and they're dejected. There are other people that I talk to every day and have been following more of the guys like Big Squeer and Chris Marcus and the Economic Ninja and David Morgan, people who've been talking about gold and silver for a long time. And then, of course, Wall Street Silver. You have a whole new renaissance in gold and silver demand, in particular silver, that, you know, they're buying this because they realize it needs to be part of their portfolio, and the lower prices doesn't deject them. So on one hand, you have a whole group of demand that we've seen over the last 2 years that's kind of sitting on the sidelines waiting for confirmation. On the other hand, you have half the crowd who's looking at this as a subsidy. So while business has been steady, it's probably the slowest month, May, that I've seen in 2 years. Wow. Slow now versus what slow was in 2018 and 2019 is a vastly different thing. But I don't mean to be too complex here, simply to say this. I think people need to look at silver as wealth. And when it fully expresses itself, it will go higher than people think possible. And I do believe that in my soul. Just like when I started in this industry, the Dow Jones was 2,100. And here we are, you know, I've watched it go up, 18 times. People would have thought that would have been impossible back then. At the same time, the Japanese Nikkei was 40,000. And they owned Rockefeller Center and Pebble Beach Golf Course and casinos in Vegas. And look at it now. After 30 years of their interest rates being at or near zero, they can't even get 2/3 of what it was. So markets will go higher than people ever think, to the up and to the down. And quite frankly, I look at silver as the most undervalued commodity on the planet. So how is silver sales? How is business? It's mixed. But before it's all said and done, I think there will be a mad rush into the physical market, as right now it only represents 0.5% of allocation of the entire financial matrix in the United States, from Joe Sixpack to the Harvard Endowment Fund. And when the realization that the Fed is trapped, I don't know when that will be, but I think it'll be like that. It'll be on a Sunday night. You'll wake up on a Monday morning in a panic, and that's when sales go from, you know, okay to off the chart. What happens after that is anybody's guess.
Yeah, I've been trying to educate friends around me and their kids, and kids especially. It's kind of difficult. But recently I did an order with you. I swore to myself I would never get junk silver because I don't want to believe that I'll ever have to actually use that. But I did place an order with you, and I know normally you sell it by the bags, and specifically I wanted a tube of dimes, silver dimes, and a tube of silver quarters so that I could show them. I could have a $10 worth of quarters in one, and then a tube of silver, and say, this one is $10. This one is, what is it now, 220. And
right.
Maybe that will kind of connect the dot for me. You know what I mean? Had you saved your money in these silver quarters instead of this worthless pot metal, you would now have $220 worth of wealth instead of 10. Does that make sense?
Absolutely. And this, you go all the way back, if you look up on my wall right there,
Mm-hmm.
That's a $10 Indian gold coin and a $10 gold certificate. So prior to 1933, you could walk into a bank and exchange them if you didn't want to walk around with a bunch of coins in your pocket. So imagine, your grandfather left you $10,000 in a box. So, he left you 1,000 of those $10 bills or 1,000 of those gold coins in each box. And, so you open up that box here, 80, 90 years later. And the $10 bills, 10 grand is still 10 grand, right? But the 1,000 half-ounce gold coins, which have retained their purchasing power, as the $10,000 have whittled away to not much, but $10,000 in 1930s would have been an extraordinary amount of money, right? So
I'd buy you 3 houses or something, yeah.
Right. So right now you're talking $1 million, nearly. So, is that right?
3
no,
houses.
I'm sorry. It'd be $500,000. Pardon me. It'd be $500,000.
Okay, couple
so
houses.
you'd have 1,000 half-ounce coins. So at $1,000 a piece. So no, that's right. That's $1 million.
$1 million.
Yeah, that's $1 million. So there's the point, that the half-ounce of gold and the $10 bill were the same thing. And when it was severed, fiat, went this way and gold went this way, or maybe gold stayed here and fiat went here is probably a better analogy. But
that's the way I look at it.
The one box is worth $1 million and one box is worth $10,000, yet it was the exact same thing. So whenever you pull, the real metal or the value out of the currency, this is what happens. But it also is, this is a common thread that we've seen all the way back to Roman times, where governments choose the printing press over austerity, and they'll always choose the printing press, enabling them to, live beyond their means. And for us all, really over the last 50 plus years, have been able to live well beyond our means due to, the ability to be the world reserve currency, which I honestly, Steve, think is being challenged here in many ways. And it's not the Fed that we have to be careful of. I think it's more along the lines of the BRICS nations and OPEC, and I think that's where the linchpin for all of this is right now.